All right, guys, it's 4:12 p.m. It is also our last meeting of the year. And to kick it off, I'm going to have Umang and Nishal actually lead us in the meeting today. Nibble was supposed to do the meeting today, but he ran into some issues, so Nishal will be taking over for him. So I'll hand it off to Umang and Nishal.
All right. Hey guys. So thanks for being here at our last meeting for the year. And today our topic will be momentum investing. So if you guys can do attendance, that'd be great. All right. So these were the QR codes for the investor games that we participate in. So I'm pretty sure everyone on here is probably joined, so we're good. Okay. So today's topic is momentum investing. So there are two main approaches to research future trends of stock prices. One of them is fundamental analysis, and in the stock market, it's a method of evaluating a company and determining the intrinsic value of its stock. So companies are valued as though they were unlisted with no regard for their market prices, and then buy and sell decisions are then made based on whether stock is trading at a discount or a premium to its fair value. And um, technical analysis is based only on stock price or volume data. So the objective is not to predict the future, but to identify the most likely scenarios. Price action is used as an indication of how market participants have acted in the past and how they may act in the future. So based on momentum investing, the core assumption is that all fundamentals are already factored into the stock price. And this basically means that there's no need to know the company's intrinsic value and that you can just focus only on the movement of the stock price. So would a momentum trader accept or reject efficient market hypothesis? Does anyone want to answer that?
Oh, by the way, EMH basically means the stock price reflect a fair value. It's that stands for efficient market hypothesis.
Right.
But yeah.
Yeah, so like Nathan said, it's basically just value investing is an investing approach and strategy that revolves around selecting stocks that trade less than their perceived value. And EMH is efficient market hypothesis, which is basically just stock prices that reflect fair value. So simplified is basically just short term. You buy during an uptrend and then short sell during a downtrend. And then momentum investing is an investment strategy that's aimed at purchasing securities that have been showing an upward price trend or short selling securities that have been showing a downward trend. And this is most effective for short-term goals. If you want to take advantage of market volatility, it's high risk and very unpredictable, and you follow a set of rules based on technical indicators.
So the way that you actually like practice momentum investing is by there's four steps really. You first have to select a stock with like upward or downward movement. So you have to like think of kind of like Newton's law, right? Like basically this type of thinking is like if the stock is going up, you can assume that more than likely it's going to keep on going up for a certain amount of time. So you're going to be looking for those trends to see like what you want to do. So you could either like look for stocks that are just going up or going down, and you need to find the perfect entry time, and that usually occurs by like you reading the news so you can like figure out when is the best time and when is that trend going to start so that you can actually like capture it and be able to ride the momentum all the way through. The like you also have to make sure that you choose the holding period wisely, because like obviously the longer you hold it, the more likely it is that eventually it's going to start going down. So like if you throw a ball in the air, eventually it's going to come down, no matter what. So you have to like be able to make sure that if you are holding it for a long time, you are like actually strategic in making sure that you don't like let it go too long, because otherwise it'll lead to a downward trend and ultimately harm you. And then you need to make sure that you use those patterns from previous times, because oftentimes, like for example, Apple iPhones, every year new iPhones are released. So if you look at trends from last year to see how Apple's stock increased last year when the iPhone came out, you can use those analytical trends to figure out what might happen this year, rather than trying to like kind of guess on it. And you have to be, so basically you have to be able to like analyze those charts, patterns, and look at trends from before to make sure like you're actually doing it correctly, rather than like guessing on it, which can ultimately harm you. So one way of doing it is looking at moving averages, which are basically like where you like look at the average 30 days prior. So like if we look at the graph, we can see that the actual stock is like fluctuating. And if you're just looking off of that, you're going to make silly mistakes. You're going to be selling it when it goes down. You're going to get stressed by it. You're not going to be able to make like sound decisions. But if you look at the moving average, you can see like the 50-day moving average is constantly increasing. So you can assume that there's an upward trend, and you can ride that momentum up, and that ultimately will allow you to make a more easier and probably a better decision in the long run, because you're looking at the momentum rather than like everyday changes. You can actually look at the long-term trend. And then the treasury yield curve is where so a yield is where like some stocks or some bonds have like you actually are able to get money. So like dividend stocks, where you actually receive money after a certain amount of time. And so this is a bond, a treasury bond, like a graph where like there's two different ones, right? There's a 10-year and a 2-year. So the 2-year one means like after 2 years it'll mature and you'll actually get the money, and this 10-year one is after 10 years. You can see that the graph, like the interest rate for the yield is going down, which means that over time you're actually beginning to lose money on the interest. Like you're having to spend more money to buy the same bond that you would have had to in the like before. So you can look at that trend to figure out like when you need to buy it. So like at that point, at like when 2 years crosses 10 years, it's probably a better time to sell it, because now you know that a 2-year stock is going to earn you more return than buying a 10-year. A 2-year bond is going to earn you more return than buying a 10-year bond. So using these patterns and using these like trends allows you to really be able to determine what you want to do when you're making decisions. And the person that really is like kind of like known to be the founder of it is Richard Dreyhaus, which is what he has actually been able to do is actually impressive, right? For 12 years straight, he has been able to earn 30% compounded annual returns, which means that he's actually been able to make a lot of money, because he's been able to really look at the patterns and look at the trends and play strategically rather than looking at the nitty gritty, and being able to actually follow and ride the momentum. So the pros and cons. The pros of momentum investing are that there's a great possibility of high profits in short time frame, because you're just riding the momentum until you believe that it's going to start falling. You can take advantage of market volatility, and you avoid emotional responses, because now you're looking at like the long-term trend. You're looking at the moving average rather than like looking at like every like hour, every day. Rather, you're looking at like the moving average, so you can see like constantly is increasing, as we saw in that graph. The cons or the negatives could be like high stock turnover. It could be time intensive, because you have to be able to like look at those graphs, look at those charts, and be able to really analyze what's going on. So it could take time, and like it's market sensitive. And so those are the negatives for momentum investing. The investor of this week was Nishal Jose. He has $1.45 million, and he's actually been able to earn or have an increase in his wealth of 2.48%. And is he here? Oh yeah, he can just talk about it. Yeah. How have you been able to earn that?
Hey guys, I'm actually driving, but it's basically just crypto. Bitcoin, Ethereum. I mean, recently it's been going down, but um, it's basically just cryptocurrencies, and I just buy and hold. I haven't been on the app in a bit, because I actually started investing on Robinhood. So I'd say start playing on Investor. It gives you a good platform, to understand how it's done, and from there just apply it to real life. But yeah, that's basically it.
Also, there is an opening for like an executive level position as an outreach associate. You can apply using the form, and it can help you with your resume, and yeah, or you can click the link. But yeah, you can use the QR code. Yeah, make sure to follow us on Instagram or follow the larger organization Cash Club Corp and visit their website.